You're listening to AI Prism from Seoul Economic Daily.
It's Wednesday, May 13. I'd like to share some thoughts about stock investors. If you were watching your trading screen today, you probably felt that whiplash.
Oh, absolutely. It was intense.
I mean, in just 100 minutes, the KOSPI didn't just pull back. It violently rejected that historic 8,000-point level.
Yeah, it was a brutal rejection. And it really comes down to the market plumbing. Today was basically a masterclass in how global currency shifts. And, well, automated trading can just completely dictate local equity flows.
Right. I mean, the index hit 7,999.67.
Just 0.33 points shy of 8,000.
Literally a fraction of a point away.
Yeah.
And then it just plunged 578 points in under 2 hours to close down 2.29%.
Yeah. And when you look at the capital flows, foreign investors dumped 5.66 trillion Yuan, which is roughly $4 billion.
Well, retail traders tried to, catch the falling knife, right? Buying up 6.67 trillion Yuan, or $4.8 billion.
Exactly. And the heavyweights dragged the whole thing down. Samsung Electronics dropped 2.28%, and SK Hynix fell 2.39%.
But wait, here's what I'm struggling with. U.S. chips are surging. The S&P 500 hit a record 7,412.84, and the NASDAQ reached 26,274.13.
Right, the U.S. market is just on fire right now.
Yeah, the Philly Semiconductor Index is up 70.56% year to date. I mean, Intel gained 250.79%. Micron is up 178.66%.
And SanDisk is up 551.93%. It's wild.
It really is. So why did Korean chips fall off a cliff when the U.S. sector is soaring like that?
Well, the KOSPI sell-off was really a digestion phase. Hitting near 8,000 is like hitting a concrete ceiling. It tripped automated selling tied to the May 14 options expiration.
Oh, so algorithms basically just took over.
Exactly. It's an automated downward elevator. Plus, it was amplified by oil topping $99 a barrel on U.S. and Iran combat rumors.
Oh, right.
Yeah, that spooked foreign investors into reducing regional risk. They didn't sell because Korean chips are suddenly bad,
Which brings us to the macro side of things. That foreign capital flight directly impacts the currency. The won weakened to 1,488 per dollar today.
Yeah, and you have to view that one weakness against the broader Asian FX landscape. Like, we just saw U.S. Treasury Secretary Scott Bessent and Japan's Prime Minister Takeshi Sanai agree on yen defense.
Right, and concurrently, the offshore yuan hit a 3-year high.
Yep, reaching 6.8 to trade at 6.793.
But wait, what is driving that sudden yuan strength? I feel like I'm missing a piece of the puzzle here.
It's the May 14 Trump-Xi summit.
Right.
That optimism is the primary macro catalyst dictating Asian equity flows right now. Traders are pricing in tariff reprieves.
Okay, so traders are buying yuan assets, assuming China benefits most from the summit.
Exactly, and a stronger yuan fundamentally shifts how foreign capital views export competitiveness in Asia, leaving Korean equities as the odd man out.
So if foreign capital is fleeing Korea because of this currency shift, where is the domestic money going? Because we're seeing retail liquidity aggressively crowd into local AI themes. Look at the Makinaracks IPO.
Oh yeah, the AI software firm.
Right. They just drew 13.87 trillion won. That's $9.9 billion in retail deposits.
At a massive 2,807 to 1 ratio.
It's crazy.
It really is.
Yeah.
But it shows this stark contrast between that insatiable appetite for software and the harsh realities of hardware. Take SK Siltron, for example.
Right. They just booked a 414.1 billion won impairment on their silicon carbide business. That's a $296 million hit.
Yep. And furthermore, they have 1.2 trillion won, about $860 million, tied up in debt with strict change of control clauses.
Wait, let's break that down. A change of control clause means if someone like Doosan acquires them, that $860 million of debt might suddenly become due immediately.
You got it. That structural hurdle severely complicates their 4 trillion won or $2.9 billion valuation in Doosan's acquisition efforts.
Wow. So hardware carries deep capital risks that an AI software startup like Makinaracks just doesn't have to deal with yet.
Exactly. The domestic money chases the cleaner software narrative, while foreign money flees the complex hardware risks. Which leaves you with this to ponder. Will this massive wave of retail liquidity chasing local AI IPOs be sufficient to offset ongoing foreign capital outflows? Especially if that red-hot U.S. chip sector faces the sharp correction that analysts are cautioning about.
That's today's AI Prism, Stock Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Yuan AFRA award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.